We've now got the market pricing in a definite rate cut in July. Jobs data came in a lot better than expected. CPI data came in, the year-on-year number slightly worse than expected. What we're looking at, and this is probably the big data out the US this week, and probably the highlight of the week will be that US core PCE Price Index data, whether it confirms for the market that we will get that rate cut mid-year, or whether it gets pushed out a bit further or even drawn back in. Hello and welcome to ATFX's US Core PCE Price Index preview. We've just got through what was actually quite a boring start to the week, and it's the first time we've probably said that in 2026. Big holidays, Lunar New Year out here in Asia. US were on holiday for President's Day. Canada was on holiday for Family Day. So a relatively quiet start to the week, but things are really going to pick up as we move through the week. And probably the highlight of the week will be that US core PCE price index data. We know it's the Federal Reserve's favored inflation indicator. We got CPI last week. We got jobs numbers. We've now got the market pricing in a definite rate cut in July and a possible one in June as well. And that came out after last week's data. So jobs data came in a lot better than expected. Some of the revisions, however, were pulled back. CPI data came in, the year-on-year number slightly worse than expected. So what we're looking at, and this is probably the big data out the US this week, whether it confirms for us or confirms for the market that we will get that rate cut mid-year, or whether it gets pushed out a bit further or even drawn back in. Year on year, they want this down to 2%. They are not getting it, and they haven't got it for a while. The month-on-month numbers, probably the headline, expected to come out plus 0.3. That's a 0.1 increase on what we saw last time out. Year on year at the moment is expected. Last time it was 2.8% higher, well away from that 2% target that we've got. Expected this time to possibly come out 2.9 or even 3%. That could see the dollar sailing, could really pull back on those rate high expectations. But what we're going to do today, we're going to have a look through some of the major products that could very well move and probably will move, let's be honest, on this PCE data release. We're going to have a look at gold, which has been flying around. We're going to have a look at euro, dollar, yen, and a little cheeky one that we don't normally throw. We're going to have a look at the Aussie because that could have some really interesting moves on the back of interest rate differentials, especially if we get a lower print for the CPI. Obviously, if we get a lower print on that year-on-year number under 2.8, a 2.7 or a 2.6, expect the dollar to get hit. Expect those rate cut expectations to either really lock in June or even maybe bring it forward through to March. Obviously, if we see that higher number above 0.3, a 0.4 or 0.5 on the month-on-month, that really does throw the cat amongst the doves. Year on year, if we get that 3%, above 3%, it really does push away from what the Fed wants to see. We know the White House doesn't want to see it, but it really would pull back on those rate cut expectations, possibly a little bit of deja vu from 2025. And we should see some big moves in the market. So on target, I think we'll probably see some fairly range-bound conditions, but there will be some reactions because markets will hold back until especially FX, will hold back until we've seen this number. But without any further ado, let's go and see where there's some trading opportunities, and there's some pretty good ones coming up. As always, please click on the link if you haven't already subscribed to our channel. We'll keep you updated on everything that goes on in the markets. So I've gone against my normal routine here. I've brought up the gold chart first. So as we know, massive moves in gold, and it will move on this dollar call. We've seen this huge appreciation since the start of the year. I think we saw sort of 25%, as we all know. Massive capitulation in a couple of days that took us right down massively lower. There we go. 15, 17% in that. But recently, we've seen a little bit of range-bound trading, right? Yes, the ranges have been wide. And it has been a harder one to call. But of the last few days, we have been caught within this, 51.50, it's probably 40, 48, 70 type of range. It has been moving in and out, just drifted lower today. These trend lines aren't probably the best trading trend lines at all, but we will be looking at them as they come in through. Obviously, we've got a couple of days before the number comes out. But what it does, because we're seeing this relatively tighter range coming in gold, if we see something out of expectation, the dollar will get hit one way or the other, and we will see gold fly. We know liquidity is thin at the moment. We know it's a nervous market. It could be one of the ones that gets a real bumper move. So from here, I think we're looking at this top side. As I said, trend lines not actually figuring too well, although this one did work well overnight. you're probably going to be wanting to, on a lower number, buy a break maybe of these highs here. So the high there, 50, just under 51. There we go, 51.20. Maybe looking for a break. The braver guys on this trend line, top side. So anything we're seeing 2.7, 2.6 on the year on year, a 0.1 on the monthly, it should take off, and we could be then challenging these fresh new levels back again than what we saw towards the end of January. Obviously, the converse is true. Stronger numbers. If it does come out 3 on the year on year, 3.1. If we do a 0.4 or 0.5 on the month on month, expect it to drop back down here, break these lows. As I said, this trend line not really very effective. We keep it there because we're going to keep linking up those lows. It would open the way. First stop there, we've got low that we saw recently, 46.55-ish, and then we're back down to this trend line, 45.15, and the low that we saw on the crash, 44.03. So potential for massive percentage moves in gold on the back of this. We will see some moves before we come through, but could be a real flyer. Let's go and have a look at some of the FX moves that we could possibly see. Okay, this should be fairly familiar. This is the daily chart in euro. This could be one of the flyer moves as well. Euro's been relatively quiet. Obviously, we've seen this nice appreciation. I'll bring the chart into a little bit more clarity. This is the daily chart. There's a 200-day moving average. We're trading not too far off it at the moment. It's tracked a little bit lower. We've seen the dollar appreciate over the last week or so, but if it sticks in this range, we could really see a good trade as well. Probably the best opportunity is on this trend line resistance that we've got there, currently coming in around about 118.70. It ties in with these highs, 118.75, 118.84. So you're probably looking at that 119 level. But weaker numbers, break to the top side. First stop, there's that 119.27, but it does open away if it's much weaker for a move back up to these 120.50 plus levels. Obviously, the other side, stronger number, it can bring us back into the range. Not really great trading levels. It would be something probably looking at the recent lows. But back down here, initial support at the moment coming in around about 117 the figure. Probably in a couple of days' time. We're not going to be too far away of that. It's a relatively shallow trend line, but it does give us a decent move. There's 150 points in that. So good potential there. Now let's look at a couple of currencies that could be a little bit more interesting. I'll have a look at dollar yen first. And here we're on the dollar yen daily chart as well. As we all know, dollar yen has been flying around. We've seen some massive moves. Geopolitics moving it, but in general, we're still in that uptrend from all the way back prior. There we go. This is what, April 2025, big move up. Where's those lows? 140, minus 140, up to 153 at the moment. We did peak up at these highs, as we know, before potential BOJ intervention came in. We saw a big move down from last Monday after the Japanese elections, I should say, came through. Takichi won well. We're expecting it to go higher. We're expecting yen weakness. We got yen strength, about 3.5% over the course of the week. It's consolidated down there and it's bounced off of these levels. Notice where this trend line comes in, around about 152.26. These previous lows just above 152. We can call 152 the level. Nice thing is this gives you a little bit of support. If we get stronger numbers, can buy ahead of this. There is a big move back up there, especially if you believe in there's a bit of BOJ intervention. They may not come in again until these levels. Conversely, of course, a weaker number can trade the break of the trend line, can trade the break of those lows. There's another one coming in here. 200-day moving average down here at 150.66. But good moves, good potential for trades, right? We'll just finish it off, have a quick look at the Aussie. And here's the Aussie daily chart. Don't have a look at this too often. But one of the reasons we're looking at this is because potentially if we get those weaker numbers that locks in a cut from the Fed and maybe a sooner cut, we've got the RBA firmly, most people believe, in a hiking cycle. It gives us that interest rate differential move, kind of similar to what we were thinking with dollar yen as well. We are not far from recent highs. Now, look, we topped out here on this trend line high. This is the high for the year, 71.47. Got this line in here as well. Don't normally have the horizontals in. The Feb 2023 high is up there at 71.60. We're about a big figure below it, but we've got some nice trending trend lines to possibly trade off of. Top side, we're up around this 71.50. I think I'd wait till that 71.60 breaks. So lower number and out the core PCE, up goes the Aussie. Break trades possible, could take us to fresh highs, fresh new territory. Conversely, of course, stronger number. We've got this quite steep trend line coming in. We've got this quite steep moving average as well. Breaks here, could see a move and a nice decent move back down to taking technically back down to 68 cents. So Aussie could be a very interesting one as well. It's had a sharp move up from the end of last year. We've moved up from where we were down, like sub 65 up to 71.60 or 71.50. Could be big moves as well. So excellent trading opportunities. Have a look at gold, have a look at euro, have a look at dollar, yen and Aussie. If you need anything from us at ATFX, please do give us a call. But good luck with your trading and thanks for listening.